Hello, I'm Sami Zaidan. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. This week, Sri Lanka avoids a debt default, but it's fast running out of money to pay for imports. Will China and India continue to bail out Colombo? Lebanon has a new Prime Minister designate, the third since the government resigned a year ago. Can he form a cabinet and stop the economic rot? What's driving up food prices in Bangladesh? And it's not only the poorest who have been hit hard, the middle classes are suffering in silence. Despite avoiding a debt default, for now, Sri Lanka's finances are in a precarious state. The Sri Lankan president has appointed his brother as a new finance minister, in a sign of how serious the situation is. Sri Lanka's economy was in trouble before the pandemic. Between 2005 and 2015, Colombo borrowed billions from China, accumulating a mountain of debt for expensive infrastructure projects. Well, you may remember Sri Lanka was forced to hand over its strategic Hambantota port on a 99-year lease to a Chinese company in 2017. That was because it failed to service the $1.4 billion debt from Beijing used to build it. The government's debt rose to 101% of GDP last year, up from 86.8% in 2019. Credit rating agencies are concerned it may not be able to service its debt. According to Bloomberg, the probability of a one-year default was at 27.9%, the steepest in Asia. To make sure it can make repayments, the government's put limits on the amount of money that can leave the country. The central bank says it has currency reserves of $4 billion, enough to buy imports for the next 3 months. To boost its reserves, it struck currency swaps with some of its biggest trading partners, which basically sets the exchange rate, reducing volatility. The biggest deal was with China, worth $1.5 billion. And that's important because China and India have been trying to pull Sri Lanka into their geopolitical orbit. It's part of a struggle to control key maritime routes in the Indian Ocean. Now, one of its key sources of foreign currency tourism has dried up due to the pandemic. But the industry that accounts for 5% of GDP and employs about 3 million people hasn't recovered from the suicide attacks on Easter Day in 2019. To conserve currency, the government has also banned the import of fertilizers. The ramifications could be profound, as Al Jazeera's Minel Fernandez explains.
Janaka Vasantha is worried. The potato farmer in Sri Lanka's Uvaparanagama region says he used less than half the usual amount of chemical fertilizer on his crop.
The growth of the plants is affected. Usually, by this time, we are harvesting. About 2 months or 75 days after planting, the area is covered by the plants, but this time, growth is far less.
Farmers across the country have been protesting the shortage of chemical fertilizer since the government banned imports in May. Indika Disanaika, a successful greenhouse farmer, has had to cut down his crop as well. He says farmers should have been consulted about the ban.
When things are being changed, they must consult us, make us aware of how things will change, discuss how this is going to be done.
The ban on fertilizers comes during an economic crisis that has hit Sri Lanka badly. Its foreign reserves have fallen below $4 billion. People's incomes have suffered since the Easter bombings of 2019, and the coronavirus pandemic has worsened the situation. The government is under pressure to find the money to pay back billions of dollars in debt. That's one of the reasons President Gotabaya Rajapaksa says his government banned the import of dozens of items, including agrochemicals.
80 billion rupees, 80,000 million rupees is what this country spends just to import fertilizer. Who does this money go to? The money goes to companies abroad. There are only 4 to 5 local companies making money from this. But the decision we took will make this industry into a local industry.
The president says he will not back down on the fertilizer ban, which he says is also aimed at improving the health of citizens, many of whom are struggling to make ends meet. A government blitz of money printing has driven up inflation, which the central bank puts at 6.1%.
If you're a daily wage earner, you've lost your income because of the pandemic. If you are a pensioner, interest rates are low and your income has come down. You're lucky if you have a permanent job, but without allowances to get an income. So income is limited. Expenditures are rising.
The economic situation is creating a challenge for millions of Sri Lankans.
It's very difficult to survive because we have to spend more than what we earn.
Back in farming country, communities are bracing for smaller harvests and a major impact on incomes. One farmer leader has an even more dire warning.
Farmers will manage this season with whatever fertilizer and chemicals they bought at higher prices. But I say with responsibility that we're clearly going toward food shortages. That's a certainty. Even God can't prevent that.
Most farmers agree the plan to cut down on chemicals use is a good thing, but say the sudden decision is not practical.
Let's unpack what's happening now with Ruchir. Desai. He's the fund manager of Asia Frontier Capital. Joins us now from Hong Kong. Good to have you with us. So are the fears of a debt default overblown?
Well, I mean, these fears about Sri Lanka defaulting on their sovereign bonds has been a story for the last 1 year. It's not a story or an issue which has come to the last couple of weeks or last couple of months. In fact, just a few days ago, earlier this week, Sri Lanka repaid $1 billion to its bondholders as part of the international sovereign bond. And also last year, in the fourth quarter of 2020, in October, Sri Lanka repaid another $1 billion last year as well. So these worries have been around for a while. So I would say the repayment for which was due earlier this week, defaults on that was kind of overdone. But I think the issue is not about the repayments of 2021. The issue is about concerns that are about the repayments in 2022. So you have, two bonds which are due in 2022, a $500 million repayment due in January 2022, and a $1 billion due in July 2022. And that's a concern, especially now that reserves are low, foreign reserves are low, and also an important foreign exchange owner like the tourism sector has been hit by the pandemic.
Well, I'm glad you mentioned that. So how is it going to deal? Because it still obviously has financial problems, even if some of the debt default worries are overblown. How is it going to finance its huge debt burden?
Right. So I think Sri Lanka is already lining up some funds over the next couple of months. In fact, they've got especially some bilateral funding from important partners in the region like India and China, and also some funds coming through from the IMF, SDR, possibly in the next 1 month or so. So they have in fact lined up funding for about almost $3 billion. And if that comes through, in fact, they should be okay for the repayments which are due in 2022 as well for the sovereign bonds.
Is it kind of pushing the can down the road, though? Because you take more money to pay off more money, the mountain grows.
Yeah, exactly. That's the issue or concern that investors have, because it's not about Sri Lanka defaulting now or after 6 months. But I think what investors want to look at is some more structural reform, some more structural long-term financing. Otherwise, you'll always have this concern coming up after every 6 or 9 months or 12 months whether Sri Lanka will repay or restructure their bonds. So I think though they may meet the near-term obligations over the next 12 months, I think the issues will still remain as long as the structural reforms don't happen. But more importantly, I think the tourism sector was historically a pretty large foreign exchange owner for the country. It was about $4 billion pre-pandemic and also before the Easter Sunday attacks. But hopefully, once the vaccination levels improve globally and also in the region, then they can recoup some of those losses and help with the exchange position as well.
The opposition has been pushing for the government to turn to the IMF, something the government has been opposed to. Why, do you think?
Any IMF program, especially for Sri Lanka or developing countries with a high fiscal deficit and a low tax to GDP ratio, would obviously entail some tough measures such as increasing tax rates and reducing expenditure in order to balance reduce some of the pressures on the economy and also on the deficit. But I think especially at this point in time when the economy is going through a bit of a rough patch, given the pandemic has hit GDP growth over the last year or so, I don't think the government really wants to take any tough decisions, or at least doesn't want to take any unpopular decisions, especially at this point in time. So I think they would probably, whether they go to the IMF or not, is something the government can answer. But over the medium term, if they can bring back some of the tourism revenues, if they get the vaccination right and increase the vaccination rate, then they can have a domestic economic recovery as well. And that should help somewhat with reducing some of the pressures, and then probably they can go to the IMF in probably a better bargaining position.
Will that help also with relieving the ban on the imports of some goods like fertilizer, or are they also just storing up problems for the future and pushing that can further down the road?
Well, I think the import ban on various goods, not just fertilizer, for example, motor vehicles and some of the other imported goods, has been there for almost more than a year, especially since the pandemic began. Because if you look at it, put it in context, foreign tourism was about $4 billion of inflows before the pandemic, and that basically went to zero over the last especially immediately after the pandemic, and also the last 12 months. They hardly earned anything from tourism, and also initially the initial few months of the pandemic, exports took a bit of a hit as well. So they lost sort of textile and garment export earnings as well in the first 3 or 4 months of the pandemic. So I think given the situation that the country was in, they had to resort to such tough measures. And I think these import bans will continue probably, or import restrictions will continue probably till the end of the year, especially now that they have repayments coming up for the bonds in 2022. And until they have some more long-term funding lined up, they will probably resort to these import restrictions for at least the next 5 or 6 months.
All right, then let's talk about maybe the plus side. The competition between China and India for influence in the Indian Ocean. Does that offer Sri Lanka some strategic advantage, and how best and how far can it use that?
Absolutely. I think Sri Lanka has still not fully leveraged its geographic position in the region. So we've seen that over the last couple of years with China making investments and also India coming in now. And especially now when with funding required for repayments, India and China have been quite helpful in providing some funding to Sri Lanka. Of course, given the geopolitical importance that Sri Lanka has both for India and China. But the government can do more. I mean, the country can do much more with its geographic position. I mean, they can bring in much more long-term foreign direct investments into the transportation and logistics sectors, which has not yet happened in a large way. And also some important projects like the Colombo port city can be long-term drivers for the foreign investments, given the location of the country. So yes, I think that is something that will continue going forward as well.
All right, Ruchir Desai, thanks so much for talking to us.
Thank you. Thank you for having me on. Thank you.
Migrant workers from Myanmar living in Thailand's border areas are facing increased hardship. Lockdown there means there's less work, leaving many to rely on donations. Yet people still flee to Thailand to escape from military rule back home. Florence Louis reports.
There's usually no shortage of work or labourers for farms in Phopra district in western Thailand. Many farmers here employ migrants from across the border in Myanmar to work the fields. But the surge in coronavirus cases in the two countries has made life more difficult for migrant workers. Thailand has imposed a nighttime curfew and travel restrictions. This lady, who doesn't want to be identified, had gone back to Myanmar last year to renew her passport. But she couldn't return to Thailand legally after the borders were closed and ended up paying brokers to sneak her back in illegally.
Many migrants from Myanmar are in trouble now. Many of us have to hide and escape to Thailand to find a job. Some of us got caught and were sent to prison.
Johnny Adhikari is also a migrant from Myanmar who has settled in Thailand for many years. He helps run a local charity.
There are a lot of children also coming along with the parents, and some parents, they don't have a document, so they had a lot of issue to going around, and if the parents get arrested, the children will be left behind in a hut or in houses, and who's going to take care of their children?
He says life here is also getting increasingly difficult for migrant workers because of coronavirus restrictions. When a new infection is reported in a village, no one is allowed to leave unless they can show they've tested negative for COVID-19. Many are unable to find work and have been relying on donations. But supplies are slowly dwindling as continued restrictions cause economic hardship for everyone else. The struggle for survival is also made worse by a sense of frustration at what's happening back home.
I want the Myanmar junta to release Aung San Suu Kyi and focus on helping the people from the crisis. I want democracy in Myanmar. Then the country can move forward to develop.
But there's no indication the generals in Myanmar are ready to give up power.
Now, global development institutions like the International Monetary Fund are usually cautious and circumspect in their assessments of member countries. But the World Bank's recent assessments of Lebanon have given up on the niceties, it seems. It's gone as far as calling out the deliberate depression that has seen the economy contract 40% and the poverty rate increase by 50%. In the World Bank's assessment, such a brutal and rapid contraction is usually associated with conflicts or wars. It goes on to say the bankrupt economic system that benefits the few has the backing of the political elites. Now, all of this has been public knowledge, with even the European Union preparing to sanction some of the key characters. Well, Lebanon has a new Prime Minister designate now, the third since the government resigned a year ago. Najib Mikati has to form a government to reverse the economic crisis. But until that happens, the growing concerns that 4 million people or more are at immediate risk of losing access to safe water. Among them, 1 million refugees already facing hardship. With shortages of funding, fuel and supplies, UNICEF estimates most water pumping will gradually cease across the country in the next 4 to 6 weeks. And it's a year since a huge explosion in Beirut port killed 200 people, injured thousands, and devastated the capital. Let's get some analysis now with Diana Menhem. She's managing director of advocacy group Kulluna Irada, which promotes solutions to the crisis. Good to have you with us. So, Diana, the World Bank has been very critical lately of the Lebanese political elite. Not a huge surprise to the Lebanese, or frankly to anyone who's been familiar with Lebanese affairs for a while. Everyone knows there's been a problem with the elites for decades, right? Why the change in the World Bank's tone now?
I mean, the change in the World Bank's tone now is because this is honestly now bordering the criminal. You have a poverty rates that are increasing in a way that has been unprecedented in the country. Over 50% of the Lebanese are poor, and the World Bank anticipates that over 75% of the Lebanese will be poor by end of year. This is really devastating. And the incapacity of this political class to govern is manifested day by day. It's really appalling that this is a political class that is still trying to cling to power despite all the misery and the destruction that it has caused. I mean, since the resignation of the 4th of August blast government, there have been several attempts at a government formation. Today, a third prime minister has been designated, Mr. Najib Mikati, and is attempting to form a government for the third time. I mean, this clearly indicates that the problem goes beyond prime minister nominations. The system is blocked. The people that are today in power are incapable of reinventing themselves. They have lost their legitimacy. People will no longer tolerate a recycled formula of the same components of the political class. And everybody realizes today that any government formed using the same modus operandi that has been adopted for the past years will no longer be acceptable. Right. This is a government that will be required to conduct radical and sometimes very painful reforms to the financial and the economic system and to pursue the investigation in the Beirut port blast. And there is no way this political class is going to do this.
All right, let me jump in if I could, Dan, and ask the question, would sanctions on the political elites, would that fix the situation and fix the economy?
Sanctions would definitely be one tool to increase pressure on this political class and to legitimize them. I mean, and they would also hit the political elite where it hurts them most, which is their pockets. But it's definitely not the only tool. There is another track that is all the more crucial, and it is the continuous opposition of the Lebanese to this political class. It is about the Lebanese trying to strip this political class out of power, stripping them out of their positions in syndicates, in municipal councils, and particularly in the upcoming elections in 2022. Sanctions alone will not suffice. And here I need to say something very important, Sami. We should not even think that increasing sanctions to force this political elite to form a government is a way out. The same people forming a government over and over again will only lead to further destruction and further poverty. The only option that is available is a truly independent government formed outside of this political class and with exceptional legislative powers that will allow it to sideline the today delegitimized parliament and conduct the reforms that I have just mentioned. So
Diane, let me jump in there and ask the question, though. Would it be enough to change the faces in the position, or are we ultimately talking about the necessity to change the entire confessional-based political system, right?
Definitely. As I said earlier, there is a deadlock in the system. There is the need to really ask ourselves, what is the new model? What is the new state that we want? So it goes much beyond...
Diana, are the Lebanese ready to answer that question? Do they truly want a system of government that reflects no confessional interests or balance between the different confessional sections of society?
The Lebanese are definitely ready to answer this. The post-October 17 uprising has shown that there is today a new group of Lebanese that are really and sincerely pushing towards the formation of a real state that frees itself of the shackles of political confessionalism. The need and the call for this state to be really free from any conditions related to political confessionalism has been very clear. It has been a main slogan that has been repeated over and over again in the streets. I believe that the Lebanese are, yes, ready, but we realize that it will be a long and uphill battle.
All right. Is there time to do this? Because if you look at the situation now economically, Lebanese pound pretty much worthless. Poverty rising, electricity patchy. Now we're talking about possibility of water supplies being held up. Is the country about to collapse before the kind of reform you're talking about can take place?
The country, sadly, is collapsing as we speak. Yes, it is true. The Lebanese pound has lost nearly 92% of its value to the dollar. People have lost all of their savings and their purchasing power. There is an urgent need for very urgent economic and social reforms and for an urgent IMF program that injects liquidity in the system. We are in a system that is out of foreign currency. We urgently need foreign currency. There is no way this foreign currency is going to come in without an IMF program. There is no way an IMF program is going to come in without necessary reforms. And there's no way this political class is going to conduct these reforms.
All right, it's been good talking to you. Thanks so much, Diana Menhem there.
Thank you.
Well, Bangladesh is battling not just the pandemic, but soaring food prices too. And that's putting basic foods out of the reach of many. Tanvir Chowdhury has more from the capital, Dhaka.
Karan Bazaar is one of the busiest open-air kitchen markets in Dhaka. But there are hardly any shoppers on this day because of a nationwide lockdown to prevent COVID-19. Mariam Begum is among the few who came out for groceries, but finds food items are more expensive than usual.
I came out to buy some green vegetables, but prices of everything has gone up in the market. Maybe it's due to the lockdown or because there are not enough buyers. But logistics and supplies are open, not sure why.
Market experts say soaring inflation, along with rising food prices in Bangladesh in recent months, have put an additional burden on low and middle-income households. Many here have lost their jobs or other sources of income during the coronavirus pandemic.
All the essential food items prices are getting high, but in comparison, people's income has not risen. So it's becoming hard for middle-class families like ours to cope with. It would be good if the government intervenes to stabilize the market.
According to data from government agency, nearly all types of daily commodities are now being sold at higher prices compared to the same period last year. Rice and lentil, two of the most basic food staples for most Bangladeshis. In recent months, prices of many food essentials have gone up, making it increasingly hard for people to make ends meet. The government has announced a number of stimulus packages for different sectors and beneficiaries during this health crisis, but not everyone is getting the help they need.
It's very hard on the daily wage earners. They're not able to earn enough money or get a full square meal, but it's the middle class who's suffering the most. Many are not able to go to work. They are also embarrassed to seek help. They're not getting any kind of help. Many are suffering quietly at home.
Some here believe hoarding of goods and manipulation of the market might be creating an artificial crisis.
We think one of the main reasons for the price hike is the desire to make an unreasonable profit by vested business interest groups and lack of proper regulation and monitoring by the government, and their businesses' open access to manipulate the market.
Despite the pandemic, Bangladesh's economy continues to grow by more than 5%. But analysts warn the rising inflation and growing food prices could hamper economic recovery and possibly lead to food shortages in a country already hit by severe weather and pandemic-related disruptions.
And that's our show for this week. There's more for you online, though, at aljazeera.com/CTC. That'll take you straight to our page, which has entire episodes for you to catch up on. I'm Sami Zaidan from the Counting the Cost team here. Thanks for joining us. The news on Al Jazeera is next.